In this presentation, we will take a look at an adjusting entry related to the sale of a fixed asset within Excel. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in Excel. We're currently at 150% on the zoom. When looking at a transaction or adjustment like this, we first want to ask the question of, did the client record anything related to this transaction, and then was it recorded correctly? In this example, we're going to say that the client did sell the equipment and then got cash and must have recorded that cash, and that's typically going to be the thing that we want to search for first, because if cash was affected, that's clearly going to be somewhere. And so the cash was recorded at $10,000, and then the other side was recorded as just other income. And we're going to say that they basically are expecting us to make the adjustment at the end of the year, meaning they said, yeah, we sold the equipment, here's the sale, here's all the information for it. What happened is we just got $10,000 cash for it and put it into the system as a deposit so we could reconcile, and we put it into other income, and you can do with it now what you think is best for both books and taxes. So that's our job now. So first we might want to go through here and just look at the accounts that will be affected. We know that cash is affected. We got $10,000. So I'm going to make that yellow. We know that furniture and equipment, that's going to be what we sold. We're going to say it's a forklift. So we sold something there. That's going to be part of our journal entry. And we know accumulated depreciation is part of our journal entry. And we know that they put the money into this other income account, that $10,000 there in income. So we have to deal with those. The sale of a fixed asset is already a complicated enough transaction because we have to deal with the cash and these two other accounts, accumulated depreciation within the sale. So what we typically want to do first is not try to start where the client left off and try to fix what's already in the system. In other words, there's already something recorded to cash and other income. So what do I have to do now just to change it to what I need to do for a normal transaction? It's easier to say, let's reverse what the client did, start from scratch, and then think about how to build a normal journal entry as if we're selling the equipment. And that's easier both for us to think about, it's easier for a reviewer, supervisor to see what we did typically, and it's easier for us to see what we did later on if we have to go back to it usually. So let's do that first. We're going to say, let's reverse what the client did. So here's the other income. It's got $10,000 in it. I'm going to debit it by $10,000. So we'll right click on it and copy. And let's go back over here and we're going to make a new journal entry. This is going to be a tax and adjusting entry. I'm actually going to unhide the cells really quick so I can make this a little formula. You don't really have to do this, but I'm going to highlight these, right click and unhide just so I can see the prior entries so I can make my little formula, which is equal to the last transaction 11 plus 1, and you could just put a 12 there and that would be fine if you want. And then I'm going to highlight these again and hide them. So I'll highlight these, right click and hide. Alright, so there's our adjusted entry. We're going to reverse, and I'm sure I've lost this cell now, so I'm going to copy that again. Other income, that's going to be the debit. We'll put that in I5, right click and paste 1, 2, 3. The amount's going to be for 10,000. We're going to credit something for 10,000 as well. We'll use our little formula of negative of that 10,000. And the credit's going to go to checking. So we'll copy the checking account, right click and copy. That's going to be on the bottom I6, right click and paste 1, 2, 3. Now if you hadn't, I basically changed the formatting of these cells to not have any indentations so that I can then add indentations. So when you copy the information over prior, if they're indenting automatically, you may not want that. You may want to go here, Home tab, Alignment. Home tab, Paintbrush. And then just paint all the way down so that you get rid of all the indentations that we got when we set up these cells. And then determine when you want to indent them. And that's kind of the problem with indentations. That's like why sometimes I don't even use them. But you can go to the Home tab now, Alignment and Indent. And so now we have that. So let's go ahead and record this. So let's do the checking account first. It's right here. I'm going to record this credit. So we're in 05. We're going to say equals, point to that 10,000. That'll bring the cash down. Then we're going to go to the other side, the other income. We're going to go down to other income. So here we are down here in 041 equals. We'll scroll back up and we'll record that 10,000 and enter. Sorry, this one, I went the wrong way. Notice I'm off by 20 now. Let's change that. So it's off by 20, which is twice this. That makes sense. So equals, and let's pick up the debit. And that should put us in balance, and enter. And there we have that. So now we've reversed what the client did, and now we can just think about, okay, what's the journal entry to record the sale of equipment? We're going to provide the information here to do it, of course, but first I would think about cash. Cash was affected, so we're going to enter the cash again, and it will be repetitive. It was already there, but now we can think about it all in the context of one journal entry. I'm going to say the last one plus 1, 13. So we're going to say checking, copy, right click, and paste 1, 2, 3. We got 10,000 in cash. Then we got rid of, I would think, this is how I would think of it. Then we got rid of equipment. So equipment went off the books, and we have to take it off the books for what it was on the books for, the cost. We would need to look at a depreciation schedule in order to know which piece of equipment was sold. This 98,000 represents possibly multiple pieces of equipment. So we would need to break those out and say, okay, which equipment was sold and what's the accumulated depreciation related to it. We're going to say that the piece of equipment sold was bought for $20,000. So I'm going to credit this for 20. That's got to go down by 20 because this is at cost. So we're going to go to I9, right click, and paste 1, 2, 3, and we're going to put a credit of 20,000. And then we need to look at the depreciation schedule and see what the accumulated depreciation is for it. And we'd have to record any kind of added accumulated depreciation as of the time of the sale in order to record this properly. We're not going to get into that right now. We're just going to record what the accumulated depreciation is and say that we recorded the other depreciation when we record the depreciation journal entry. So just be aware of that. We're going to say that we have to record the related accumulated depreciation. It has a credit. It's going off the books because it's going to be related to this equipment. So we have to do the opposite thing to it, which is a debit. So we'll copy the accumulated depreciation, right click and copy. We're going to put that underneath in I10, right click and paste 1, 2, 3. And we're going to say that the accumulated depreciation is 2,000 for that piece of equipment. We're going to have to debit that. Now the difference, if you subtract these two out, that's 18,000, and the checking account is 10,000. So of course, that's going to be the difference. In other words, 18,000 is the book value. We got 10,000 for it, minus 18,000 gives us an 8,000 loss here. So then we're going to have a gain or a loss. Now, we don't have a gain or loss in our accounts. They put it into other income. We could use that, but I think it'd be better to have the gain or loss. We could then check QuickBooks and say, okay, let's check their chart of accounts and see if there's a gain or loss. It doesn't look like there's a gain or loss, and therefore we might want to add a gain or loss account. Now, oftentimes we don't put it in alphabetical order. We're going to put it like kind of on the bottom because it would be in the other area. So that's why it wouldn't be in the normal income up top. Typically, we don't put it in the income because we'll set it up as an other income, which will be on the bottom. So I'm going to put it right above this other income account. So we'll highlight this section, let go, right click, and insert. And then we're going to shift the cells down. And then we're going to call this account loss on sale of asset, or let's say equipment. So we'll say loss on sale of equipment. So in this case, it's going to be a loss, and therefore it still wouldn't be with the other expenses. It's going to be a loss below in other expenses. So we'll say 0, and that brings the formula all the way across within Excel, does that for us, which is nice. And then we'll copy that, right click and copy it, and bring that up top to our worksheet in I11, right click and paste 1, 2, 3. Now the nice thing about this format is we could just highlight this now, and there's the 8,000 that we need. Now what we want to do then is to put that, we can use a negative sum formula to make that even easier to do. We can put our cursor here, it's going to be a debit because that's what we need, and we could say negative sum function with a negative instead of an equals, and then highlight this information, and that'll take that and flip the sign. And therefore the debits 20,000 equal the credits 20,000, or if we take all of it, it adds up to 0. So it gives us a nice little check figure using the plus and minus debit and credit kind of format we've been doing here. Now let's post it. So we're going to go up to, and we could indent this one too if we want to. We could click on this one, go to the Home tab, Alignment, and Increase Indenting. So there's our credit. So now we're going to post it. Here's the cash. Here's the cash up top. There's something in it. So we're just going to double click on it. There's what's in there. We want to go to the end of it, say plus, and then point to that 10,000 and enter. So it increases the cash back up again. Again, cash went down and it goes back up. That's fine because it's going to give us more clarity, even though it takes more things to post. And then we're going to go to the furniture and fixture. Here's furniture and fixture. We're going to be in O11. And again, note that being able to post something with the minimum amount of information is not the best way to go. What we want to do is post things in a way that it's easiest for us to see, or for a third party to see, or for us to see a year later. That's really kind of our goal. So now we're going to go to the furniture and fixture in O11 equals and point to that 10,000 and enter. Whoops, so that's the wrong 10,000. Let me delete that. We're going to do that again. O11 equals, and we're going to point to the 20,000 credit, making this amount go down to 78. Then here's the accumulated depreciation. That's going to be right underneath. Here's accumulated depreciation. Something's in it. So I'm going to double click on it. We're going to go to the end of it and say plus, point to that 2,000, and that's going to bring the accumulated depreciation down. Then we're going to go to the gain or loss in this case. If we scroll down, we're out of balance, of course, by that $8,000 loss. We're going to record that right here. Here's the loss. We're in O41 equals, and then we'll scroll back up and we'll pick up that loss, the 8,000, and enter. So there's the loss. And our worksheet gives us a nice, it tells us we're back in balance. It tells us the effect on net income here, which is nice. So here's the beginning net income. Here is our adjustments to it. Here's our ending net income. So we had this gain that we took out of the gain, and we actually had a loss and not a gain. So this is kind of the effect from what the client gave us, and really this is the effect of the journal entry that we had recorded if it was just the loss on the sale of the equipment. So this is what we have now. Now note that, of course, when we sell this, the accumulated depreciation for the taxes will not be the same. So we're going to have the same kind of issue as we had kind of with the client posting something that's not quite right. When we go to the tax side of things, we're going to say, me from my tax perspective is saying that this isn't quite right because the accumulated depreciation is wrong. And again, rather than me kind of going, let me try to figure out what I can do to shore up this to make it what it should be, it's easier, and it's easier to audit and go back and think later by reversing this and then just recording the whole thing again as if you're talking about a tax basis. And so that's what we'll do next time. For more accounting information and accounting courses, visit our website at accountinginstruction.info.